What up, what up, what up? Welcome back. And we are back. Wow. Little break, re-energize, refilled. Alright, so and it's there, pop up. Oop. Muted? Muted? Y'all Cowboys ready? Ready for buys and self stops? What up, chat? You Cowboys. All right. Bro, why is your camera so crispy, bro? This guy's camera's on portrait mode. It's so crispy. Hold on.
Oh, I said I got the Sony A7 on, that's why.
Ah, I need one of those cameras soon.
Yeah.
What's it called?
A7, Sony.
Sony A7s. Oh yeah, that's the one Marcus was talking about. Yeah. The show. All right, chat. Today, right now, in about 30 minutes here, you have FOMC. All right. And it should be very interesting. Let me just go clear the breakdown. Clear it is. I think we got Ted stopping by soon too, so yay. All right. Where is his focus? All right, we have 30 minutes until FOMC here. All right. Again, they're expecting to, by the way, gold dropped. I wanted to discuss this with you guys. I mean, hey, we were talking about this during the New York session this morning, how we have a very high chance to come down towards that support. And I know a lot of you guys took sells there too. I was looking at it with Wix too. Like we were discussing it. Like there's a very high chance we're gonna drop, even though we were at support here, just because this candle at the given time was breaking the 4 lows, and the 4 lows were somewhere like around here, right at 1915 here. So the moment you broke those lows, that was a high indication that we're gonna drive down towards next support, and that was gonna be roughly down here at like 1907 lows, which we discussed this morning on the streams, right? And I guess that 10 a.m. push was it. I mean, we spent the first like 30 minutes, I think, of that 10 a.m. candle creating a top wick, and then next thing you know, this next 10 a.m. candle just boop, came down, and then there was no drawdown on the flip, I believe, too. And if you pay close attention here as well, I think what happened was there was some type of minor support right around here, and if you kind of block the sell right around here and go off of this kind of would have closed below the range for you, right? And as this kind of closed below the range, that was your sells, I guess. But Some caught it, some didn't. It's okay if you didn't. You know, it's not the end of the world, but you do have FOMC today, and it should be very interesting. Very, very interesting. US 30? This is focused on gold today. GJ is not focused on that. Our focus right now is just gold, right, guys? Just mainly gold here. Let me go and do my analysis, although it doesn't really matter just yet, but it's good to have some indication, some key levels you gotta worry about, right? So you have some type of support right around here now. So let's go and mark that up. Some type of support here off of the most recent support, and then you have one low support right around here, I believe. I believe it's going to be over here. Yeah, so you have some type of support here. I believe once you break below the support, you should be able to come down towards next support, which is 1902 here. It's not bad. Here's the thing with FOMC, they're expecting to hike interest rates, and as they're expecting to hike interest rates, like technically speaking, we should drive down, right? But the question is, like, we dropped the whole entire week. We dropped since like Friday, the past 4 days, and now we're like, we dropped this morning as well. I wasn't even like after the stream ended, like around 9, like, hey, you know what? I think we're just staying in this range, and we're gonna call it. Next thing you know, this thing drops. So now I'm like, okay, well, price is most likely priced in. This is all most likely priced in. News or FOMC may not do much. Although we're not at the next weekly support yet. The next target you have is gonna be somewhere down here at the 1988 mark. The support down here, right now 1890 mark, and I'm expecting price to drop down towards there, especially after breaking the lows. You do have clean traffic breaking into this range now. So FOMC could push price towards that support. It's going to be a nice $20 move going down for FOMC, I think, if price does come out as expected, 200 pips. So it's going to be quite interesting what happens here today. But yeah, let's just wait for FOMC at this point, guys. There's no positions for me until FOMC. Maybe like let FOMC come in right at 2 p.m. and then at around 2:30 is when you have the speech, right? So Jerome will go into low speech. That speech is already like done. It's already scripted out. He's just reading it, right? So I believe 5 minutes before FOMC, what usually happens is they release a speech, and then probably you'll get your positions from like 2:45 to 3. Wait for maybe the what do you call it? Wait for the 3 Canada to close, and then we'll take positions. I'll be on the stream till like 4:30. If we get anything within that time, cool. If we don't, then we're gonna hop off. But why is Wix now wearing a suit? Hey yo,
work, bro.
hey, yo.
Working.
Hey yo,
I'm here for
He's,
work.
he's the market maker.
he ain't fucking around, bro.
We're here to work today.
Hey, sir, what up?
This guy brought the blazer. Yo, he's giving the speech, not Jerome. He's giving the speech, not Jerome.
Somebody getting fired today.
Works sounds like, yo, I didn't catch any this morning. I'm getting sick of this. I'm finna go ahead.
Right
I'm gonna go work. Let me set Ted to Zoom link, Ashley. Where's Ted?
Don't tell me I don't show up here like it ain't work.
Yeah, 1873, exactly my levels. I got 1888, but close enough around those levels. Yeah, quite interesting, mate. Quite interesting. Yo, Wix, ain't fucking around today?
Pretty sure you're wearing boxes with the blazer. Yeah, we wearing boxes with the blazer.
Hey yo,
We're not fucking around today. We're here for work. This ain't funny.
Afternoon, gentlemen.
good afternoon. What up, Ted?
Hey, yeah, I just if you look at the market structure on the daily,
Straight into it.
1873 just looks like a level. Like if you were to anticipate a bearish move, where would the bearish move complete to? And 1873 just looks like that area that it just finishes, like even a little bit above, right? Like obviously 1873 is probably the bottom, like 1874 or so. But if you look like maybe 1888, it's just if you go back to the daily there, Don, you'll see like this is, it's almost like we're supposed to come to this area here. Like we're like this candle's literally just supposed to drop to here and maybe touch this area here and then bounce.
Yeah.
Like it just seems like that's what's gonna happen. And because I've just seen this so many times in the past where we see this candle here and you're like, oh, why are we already dipping, right? And this is my question all week. It was like, why are we dipping? But it's just like, it's so obvious that it's going to drop. And the extent of this secondary drop will be what Powell says in terms of how the rate hikes are going to come through, right? So if they do more rate hikes, obviously this will push through. But if they do less, it bounces here. But I really think that we fly through this area here if we're going to dip. Like it'll just drive through. And I think if you're going to trade FOMC today, to be honest, keep your eye on the daily candle, take your position, mark your stop loss, and just let the daily run. Because if you look at the hourly candle or 30-minute candle, it's just going to be doing this, but the daily will end up finishing just driving down like that. It just makes sense in my mind that we've come all the way up, and now to complete, we have to complete this area over here. Like it just makes sense because we started to tap into it, and we still have to just finish that drive. And you can see like this candle here, you have all like these little pieces of traffic. That's what I think that we have to complete, because I think if we were to go back up right now, this daily candle would have already gone to this level here.
Yeah.
Because it's hard for me to understand like how this candle would just suddenly flip up when it doesn't come back into this zone over here. Like it's at the edge of that zone, so it has to tap it somehow if we are going to drive back up, right? Like if you were to say, okay, how is this how are we going to play out, right? So if we let's just delete this as an example, like all this over here, like how are we going to play out? You obviously have this being support right over here, right? And it's like whenever we've had a rip up with gold, we've always needed some sort of liquidity. So then what you can say is that this area here now is the zone that we have to tap into to grab liquidity, because you can see now once you remove that box, you have all these wicks here that created liquidity, and then you have that wick right there that drove up. So that wick here would drive down and then go back up if indeed that's what we're going to do. That's sort of my idea. If you want to be super conservative, you take buys above here, you go right to here. That's super conservative. You don't have to worry about life. Taking sells, basically you're going from here. Essentially, you're navigating maybe to here, like super small. And if you want to go super big, you're going over here. And also keep in mind too, so this is another thing, the Asian session tonight is going to absorb this news. So what's mostly going to happen is more than likely the trend is going to continue. So don't get freaked out when the end of day pullback starts. Think about the fact that the Asian session now has to absorb that news, and they'll drive it and they'll continue it through, along with the fact that the European session has to also absorb that news as well in the later half of the morning. So if you get a really good entry right now, whether it's a buy or a sell, like we don't care which way we're going, we just care about, your entry. You can probably hold it through till like the London session if you want. And what you can do is just trail your stop, right? Just have it trail like maybe 50 pips or 40 pips and just let it run. You know, because in case it reverses or whatever, but you're able then to manage your position that way.
Perfecto.
That's all I got.
Yeah, like that weekly even, like it just shows like 1900, like 1980, same levels you kind of marked up as well.
Yeah, yeah,
And that's what you discussed yesterday too. Yeah, I can
like you just have to think about it from a logical standpoint. Like, are we really going to stop like just before that bottom area, or are we just going to finish it, right? It's just clean traffic.
Yeah, it's kind of what I marked up yesterday too. Just breaking into this range here just makes sense for us to drive. If you flip it, it just, I don't know, it's just like we're bouncing off this minor support, but it's just such a minor level. You have much more range to go.
Yeah, I mean, look at it that way. If you do bounce off that area, I mean, it's too hard for you to predict that.
Yeah.
But it just, from a probability standpoint and from an experience standpoint, how many times have we not done that, right? Like, and if you look at the structure of gold, how have we had reversals in trend, or how we had, like, you know, this would be a reversal in the trend currently, right? Because the weekly candle's bearish. Like, how would we have a reversal? We would need a huge liquidity wick to then drive today to start the trend back up for the rest of the week, which would mean the weekly candle we currently have is liquidity to grab to continue moving back up to, you know, 2000 or so, which is legitimate. There's no problem saying that, but it's like, I think we have a little bit further room to drop more before liquidity's grabbed. But I mean, once again, your safe positions are always above, you know, daily candles or below daily candles. Like today, you could sit back and watch and then just attack it tomorrow, so to speak, if you don't want to be part of this. But I just really think the structurally, the way that we're going, probably 1875, 1876, we may dip down there, and then that will be the determining factor if we're going to drive back up. And if you're looking at buys, you're looking at buys potentially above 1924, and that's not maybe today, maybe tomorrow or the start of next week. That's all. So you can play both sides. You can just determine which side you want to be on, and just take your time with this. This is probably the easiest news event to trade, because there's such a long, it's such a big move. So if you're looking to only grab your 30 or 20 pips or whatever you want to grab, it's very, very easy to do that and then leave for the rest of the day. Even if it moves another 200 pips, it's just the idea that you have such a huge opportunity to grab just what you needed for the day, where normally if you trade, sometimes you only grab 30 or 40 pips in the morning, or, you know, whatever you do. It's a little tougher because, you know, there's a range there. You have to worry about, you know, where we are with support levels. But with FOMC, you're always pushing through various support levels once we start chugging along. Like it's a steady move, and you can go research this and just review the last, say, 8 FOMC events. It's been a steady directional move. Like, it hasn't been choppy. Like, you don't see whipsaws for like hours at a time. It's like you get one move and then you get just a push, and it's just a continuous drive. And if you look at your higher time frames, it all just lines up to continuously move in that one direction. So you do have lots of opportunity here. Oh yeah, you got like 8 minutes or something like that.
7, yeah.
7, yeah.
And then they released that 5 minutes before the speech. They released that
They released the speech.
yeah, the speech.
So once again, the YouTube chat is asking for a buy or a sell. Well, once again, it will determine what is happening based on the press conference and based on the news. I think if we are dropping for a sell, you have an easy push from 1906 down to 1900. That's your first area. If you want a super conservative trade, it'll be from 1903 to 1900. If we're going up, once we break structure and we're at 1914, we're going to 1924. So you just have to wait and see. That's all you have to do. Set your levels, and then when they reach those levels, you just have to just execute at that point. Like there's no need to rush, and I want to emphasize this enough that there's no need to rush these trades. You can literally sit and wait till 3 o'clock and be like, ooh, the 2 o'clock candle went bullish, or the 2 o'clock candle went bearish, and you know the 3 o'clock candle is gonna follow. Like it's obvious. It just takes a little bit of time, but once it starts moving, it'll be moving in that direction.
Yeah, like you might get a push at 2, or you might get a push during the speech. I've seen events where both happens. Okay, if you don't get a nice push at 2, like right when the numbers come out, then you'll probably get it during the speech. So from 2, what I usually do is I wait for the speech to end, and around 3 to 3:15 is when I take my positions, or 2:45, 3 is when I take my positions. Yeah, exactly like Ted said, market levels and just wait for those closures below above ranges, and then take it towards the targets with the volume that you have with FOMC. That's how we always do it. Ooh, 5 minutes. Cowboys gonna have spots and sell stops. Are they trading now? No. When I'm in a trade, you'll see me in a trade. Yeah, chat. I'm not gonna have buy stops and sell stops for news here. You wait for the 15-minute? No. So I wait for numbers come out. Boom, boom, boom. They're expecting hike the rates. And then there's a speech at 2:30, right? So it's gonna be very volatile from 2 to like 3, obviously. And then when the news sells down and market absorbs the news, then I take positions as price action starts to form in my favor. So I'm expecting price to drive down. Again, my data targets, which we discussed, I posted my IG story yesterday for all of you guys, was 1889, right? And I'm looking towards sells towards those levels today. So if I want sells, what I do is I mark my levels. Like, okay, well, where do you have areas of interest? Where do you have areas of support? You have some of the levels right here, 1907. You have 1902 next. Below there, you have 1998, and so forth, right? And as price closes below those levels, from 2:45 to 3, I'll take positions coming down to fill those levels with the news. All right, and that's how I trade news. Wix, where's the suit? You took it off?
Yeah, I came into work and then I started smoking and I had to open up the windows and the doors and it's fucking hot outside. It got pretty hot in there. I was like, no, this is not gonna work.
Looks like I'm gonna be Jerome today.
Yeah, I came in. I was like, fuck that. We're gonna be serious and come into work. You obviously can't be serious in that shit. Fucking hot.
Yeah, Miami, bro. If we're in Canada, makes sense.
This is my job. I got dressed for this shit. I didn't even get dressed. I fucking just go in a blazer and a shirt. So much for that. Yeah, it's hot.
You catch
I don't know what-
you catch gold earlier at 11:10 or no?
Nah, I was looking at it. It was real funny. It was dropping us.
I saw these counts drive down, and I knew the Discord was gonna be popped. I checked Discord.
Yeah,
Everyone
I
caught the
went
sells.
Straight. I went straight to Discord. You over traders, all of you over traders. It was funny, Like I knew it was coming down, but honestly, it's outside of my trading time, and it's it's just a matter of principle. I have such a hard time bending my own principles and bending my own rules that I'm just like, I knew it's going down. I know it's going there. It's just I'm having a hard time entering a position on, way outside my trading window.
Hey, spreads are like 6 pips right now.
10 on.
Yeah, TD. Yeah.
Yeah, I don't know how they do it, but they're basically about half. Whoa.
Yeah,
we go.
news there, and dip. Ooh.
TD gapped.
Wow, did it even print down towards 1904? Oh yeah, Wando and these markets are very different. How did TD look?
TD gap down.
Oh yeah, TD came down 1903. Yeah, on thing it came down towards like 1904. Hey, all right. So if you guys had Boston sell stops, you probably would have been.
You got screwed.
You got fucked. Actually, sells you might have been fine maybe, but you got slipped for sure.
Would you lose like a Toyota Civic?
Wow, that 1 minute candle, holy. That 1 minute candle was like $8.
Jeez.
All right, so yeah, I mean, expected high grades. I mean, numbers came out good, right? I mean, for sure. Yeah, 0.50. So these high rates. So now you have numbers and now you have volume. The issue now is, okay, well, what's Jerome gonna say during 2:30 here?
Yep.
So
It's gotta
You
leave
see
a
how
clean
it's
range,
not
so.
really moving yet?
yeah,
Because they're waiting for Jerome.
Jerome in the house.
But you can see now, like if we're gonna dip, you can have sell stops below 1900. That's an easy move now. We're gonna dip below 1900. It's an easy move all the way down to like 1890.
Yeah, yep.
So now you just sit back and wait. This is awesome.
Cleared out a range, cleared out a lot of orders.
Yep.
How did you get screwed? Did you get slipped, or did it go the wrong way?
Who?
Ted he said he got screwed.
No. He said you
I said other people
would
would
have
get
got
screwed.
screwed.
Yeah,
Oh,
you would have
yeah,
got screwed
they-
with buy stop and sell stops. Yeah.
They said you got screwed. I'm like, what did you
Oh
lose,
no,
a
no,
Civic?
no.
I'm like, how did you get screwed?
No, I'm sitting enjoying.
You lose a Honda Civic?
That's what I asked. That's what I heard.
No. Just sitting back watching. Like it's actually printing between 1914 and 1900. So this is actually really awesome for us. If we are gonna dip, it's gonna move hard below. But I think everyone's waiting for the speech.
But with the volume, we might not even get a closure below. It just might drive once it starts heading in that direction.
Yeah.
A lot of
Let's
fun.
put it this way: it's going up right now, so that's probably a good thing if we're gonna drive down.
Nice.
And just keep in mind too, with this rate hike, this is the first one of the year. So there's a level of importance, and there's a level of uncertainty right now that's happening. So we're looking at this, and it's like, well, how come it hasn't moved like $10 in 1 minute? It's because no one's really sure yet what to expect from what Powell is going to say, which will set the standard for the rest of the year. So once he sets that, that's when you'll see everything release. And that's when you'll see the actual move start to go, because that's when the institutions and everybody that's involved in this will be like, okay, this is what we have to plan for. Start. Because what's happened is, if you think like an institution right now, what's happened is this week they've planned for this. They've said, okay, based on our forecasts, because obviously they have thousands of employees and supposedly they're smarter than the government, they've gone through various modeling. And they've said, okay, this is what we're expecting Powell to say based on the current economic conditions. If he says this, this is how we react. If he says this, this is how we react. So what they're looking for at this point is they're looking to see which scenario that they've modeled will be the correct one at that point. Okay, so just sit back and wait, and you will see how things start to move. And like I said, you'll have from 2:30 to 4 o'clock, you'll have a great opportunity.
Amazing. I remember that one FOMC in June, I think, of last year. You ripped, I think, 100 pips on that 2, and then 2:30, everyone's like, oh, move's done. Hour later, we moved an extra $20. Next day, you move an extra $200 again.
Yep.
It's a continuation of a trend the next day.
Like, we're right now in such a very good situation with this FOMC, because it's not moving fast and it's setting up for a move. Like you can see right now, it's moved from 1905 to 1914, and it's just sitting there. So we can sit back and just wait now and see what the next 30-minute candle is going to bring for us, and that will begin the move. Because 1914 is also a bit of a resistance area too. So we might be going up to grab orders to continue to flow further down. And then anticipate, think about it this way. So your play right now, as we're moving through, you anticipate this. You say, okay, if this 30-minute candle flips at 1905, we have now liquidity to drive further down. If we pull back one more time with this 30-minute candle, so the next 30-minute candle pulls back, it pulls back into 1907, 1906, we drive up to 1924. So that's your play. So anything above 1916 is a buy to 1924. Anything below 1905 is a sell to like 1900, 1895.
Get a fake out here. Come down. This is the pullback. So the next 15 closes bear, next 30 closes bear. Below 1915.
Yeah, you break below 1903, like the daily just re-breaking the lows, and then it just goes straight down towards 1890.
We just gotta respect 1915.
Yeah.
So people asking questions about the trade currently, think about it. How right now is there a position to be taken? Think logically. How do you examine a position to be taken right now with one candle that's just bouncing back and forth?
Whipsaw.
Right? You have to learn patience. You really have to learn patience. A move with a particular pair is not a single candle. It will be multiple candles. You just have to look at the daily. Look at the daily right now. There's been 3 days of bearish movement. You're telling me that in 3 days you couldn't catch one sell out of those trades? So what are you panicking about right now with one single 30-minute candle one 15-minute candle, one 1 hour candle. You have to get out of that mindset of, oh, are we in a trade? What are we doing? What's going on? Plan them. Plan them out. You see your levels, you see the opportunities, anticipate. If we do this, then I do this. If we do this, then I do this. Don't say, oh, because the candle's going up, I have to take a buy now. Let things marinate. See what's going on in the market and then say, okay, this is what I'm going to do if this happens next. Right now is the planning part. This candle means nothing to us. We're planning based on what happens in the next candle now. You have to get used to that. Sit here and you can say to yourself, if we're going to sell, I'm going to take a sell at 1905 or 1906, and I'm going to sell down to 1900 because that's a safe level for me. That's it. That's what you can do. If I'm going to take a buy, I'm going to wait for us to break 1915 clean. This is not a break. This candle moving up and down at 1915 is not a break. I want to break right out of that zone. So if I'm looking for a break out of that zone, this is what I'm looking for. I am looking for, let me see, is the annotation bar gone?
I mean, we got
Oh, there it is.
confirmation of volume. Now we just need confirmation of direction.
Right. This is what I'm looking for my next candle. This. Right? So I know that if we're going to drive up, I need something from the downside in this area here to drive me up. Target here, target here. If we're going to the downside, I need something here to then fill this area here, and I go there. That's all you're doing. This is all trading is these two ideas, this one and this one. That's it. It's not trying to guess what's happening here. Who cares what's happening there? I like the fact that it's staying within this area. Imagine if it just did this, then you're like, oh man, I just missed a whole move here. Or, oh shit, it just dropped down here. I missed a whole move here. The fact that it's doing this is great because we can sit and play both sides and wait. This is where you should be excited that nothing's happening right now, because when something does happen, you'll be able to catch it.
I'm on mute. Yeah, so what I was saying was, why do I have support there at 19.2? Because look left there, you have some type of support here, right? So let's say you break below 1907, my previous support, you're most likely going to come down towards the next support, which is right here, right? So that's one range. So if you break below there, you're going to come down towards the next support at 1982. So it's just like ranges within ranges. That's all it is. You're just taking out range by range. Right now you're in this range, right? This is a FOMC range. Once you break out this range, you're into this range. Once you break out this range, you're into this range, and then so forth. So you choose the range you want to trade, right? You have about 18 minutes left for a speech here, so we'll play it, see what he says.
Now, if you watch the 5-minute candles, you can see the 5-minute candle starting to reject that 1914 area, right? So now we're starting to see a little bit of hints on where we could potentially be going.
Yep. Little bits of info at a time. So this 5 here closed bearish. This 5 breaks the lows again. Should just rip down towards 1907 here.
But you can also see now too, 1914 is being respected. So we know if we're going to break above 1914, we have our first level at 1919 and then our second level at 1924. So this is important as well. So you can see you have opportunity here. So sit back, wait. There'll be you'll see at about 2:28 p.m. or 2:29 Eastern, you'll see the news really start to move because people have gotten a hold of the speech, because the speech is released literally minutes before. Yeah.
And it takes the markets like a couple minutes to absorb. All right.
Seconds.
Yeah, seconds. Depends on how fast they read, no?
Yeah.
Oh yeah. Now we come down to 1907.
I'm not in any positions yet. I have my levels. I'm patient. But we just had a massive rejection now on the hourly. So if we do break below 1907 into 1905, that could be our move.
Guys, we have to like 4, so I'm here till 4. Whatever presents itself will present itself and we'll be in. If nothing presents itself, which I doubt it, then we won't be in anything, alright? Yeah, there was that 5. Right, this 5, this kind of over here give you no information. It just kind of gave you a range. It was great because we respected both ranges. And then as now we have a range formed with like the bias obviously being bearish with all the news, you have a 5-minute closure resistance. Okay, well, now you ask yourself, okay, well, if this is a range formed and now you're closing at the top of the range bearish, high chances next 5 would drive down once it breaks the lows or once it flips, right? So then that I mean, you could just take positions there, have your TP down here, stop loss above the previous high, because you know now that if that 5-minute comes up and breaks the high, that'll be the 1 hour candle breaking the highs. And then that's when you'll probably drive up towards 1919, 1924 levels, right? So that was like your cowboy entry. If you want to be a little safer, then you're gonna need let's see, what time is it? 2:15. This next 30-minute candle close below like 1907 or 1902, and then you can take positions. I think this would be the safer position here, 1902.500. I think I'll look for positions down there. Maybe the 15 below 1907. Let's see. But once you break 1902, you'll be breaking the lows of the 1 hour lows, so it should just drive down. Also day lows too.
Powell's statement so far, which was released, basically he's talking more about economic indicators have continued to strengthen, but the invasion of Ukraine by Russia is causing tremendous human and economic hardship. The likely implications for the U.S. economy are highly uncertain, but in the near term, the invasion-related events are likely to create additional upward pressure on inflation and weigh on the economic activity. So he's playing both sides. Nice.
Oh yeah, you're breaking the lows now. Yeah, you break 1903 here, guys. 1903.288. You are re-breaking day lows, and day low is gonna come straight down into 1989 here. Especially this range right here. I'm waiting for this candle to close, but this thing might just drive before this candle closes. That 15 broke the lows, right? Yep.
Yeah, but it can just as well reject. I don't know. Right here, 1902.
Yeah. Now you're gonna slowly creep down.
Slowly.
Slowly creep down here. Boop, 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 boop. This is a 100-foot range here. Wow.
Gonna get filled. We're already been 20 pips here on the break of the lows. 22. Ooh, 40. Oh.
And there's your push. 1892 here.
Solid. I mean, if you're impulsive or if you're fine with just, if you're experienced enough to do this, you should have been taking profits, taking some off the board already, securing something.
That 5 minute entry was it. That was clean.
Us, we're just waiting.
So there's your drop.
What can happen next here is, I mean, after the speech and all that, this candle is likely to pull back and give you some sort of wick fill on this hourly, and that's another piece you can catch as well a bit after the news settles down too. So similar to what happened this morning, you had this first initial drop right at 10, and then you had the wick fill which came down, refilled the wick, and then continued to drop here. Clean, clean, clean.
But do you see how you planned that out? So cells are running perfectly.
Mm-hmm.
So did we learn something today, everyone? What did we learn? Cells below 1905. Be patient. Nice, easy trade. Where's your stop loss? You don't need a stop loss. Why? Because the momentum of the market was driving in your direction. Now you move your stop loss into profits and you let it run all the way down to 1890. And then you say, thank you, because I was patient. I had a really good trade. And if it comes back and hits your stop loss, that's okay too, because you were in profits.
Damn, look at that. Daily candles coming down. Chat, we have nowhere to go now. Look left on daily. It's going straight down towards 88 here. It might struggle here for a bit, some type of minor support here, but for the most part, it should just continue to push down. And then, like Ted said earlier too, he sees like 1872 if you want to hold till then.
Yep. But now you know you can place your stop loss at 1900 and you've secured 50 pips, right? From 1905 to 1900 is 50 pips. We're now at 1896. So happy day. There was no stress. Look at that. You just sat back and just let the trade take care of itself. And you're like, hey, that was an easy trade. My entry was 1905. My stop loss is at 1900 and I've secured profit.
Bro, that was not an easy trade. He gave you guys a signal.
I don't know what more do you want. Like, that was the easiest trade. I just grabbed 50 pips on 4 positions.
Right? Chat, just whatever your plan is, right? If your plan today would come to today's live stream was, okay, I'm going to follow whatever Ted says, you would have won. If your plan was you're going to follow whatever you wanted to follow, like whatever your playbook was, whatever your entries were, then wait for your entries, right? Your day's not over. You still have many positions to take, many ranges to come down to, many wicks to fill. So
Just created some range.
yeah, this third main countdown closing about 7 minutes here. Next countdown just drop down, fill a wick and tap 1982, 1892 here. So we may get some positions.
I literally gave everything. I literally gave everything. I said, wait till the candle flips. 1905 would be your entry because that means we have enough momentum from the upside to go to the downside, and it drove. There's no more explanations. Why did you enter a minute early? Why did you do this? The market had already told you what you needed to do. You waited for that opportunity. There's no more that you can do with that entry. That was perfect. You had so much momentum from the upside. You figure we tapped 1914. We tapped 1914. Just use common sense. All those orders that were collected from 1914 had to go somewhere. Where did they go? They went all the way down to 1895. You had 100 pips from 1905 to 1895 with no risk. There was literally no risk for you because it drove all the way through. You didn't have to place a stop loss because the hourly candle flipped. That means all those orders from the upside drove to the downside. And all you had to do was say, once we break 1900, I move my stop loss into profits. And if it comes back and hits it, I'm okay with that because I made 50 pips in about a 5-minute candle with no risk. I didn't need a stop loss because my sell stop was in profit instantly because of the momentum of the market. Just think logically. And now what you're going to do is you're going to look at that trade and be like, okay, now I got to find another one. No, you don't have to find another one because you did exactly what I do on a daily basis. I plan my trade. I execute my trade. When it comes to the level that I want, it magically works. It closes at the level that I wanted, and now I'm done. If this trade now moves 200 pips to the downside, great. I'm happy for everybody else. But you know what? I didn't need a stop loss. I didn't need to risk myself. I didn't need to try and guess the direction. I just had to sit and wait and be patient. That's all I had to do. And literally, that trade was planned out as the market was moving. We watched it happen from 2 o'clock to 2:15. Hey, look, the 5-minute candle starting to reject. This could be of instance of importance.
Yeah, guys, at this point, if you're still trading, wait for his candle to close. Wait for Jerome to speak. And then, I mean, we already know what he's going to say. Ted just said it about 10 minutes ago. But he's going to say the same thing. And then markets should be capturable after. I'm still here for more positions, chat, so don't trip. Don't trip, don't trip, don't trip. I think I gave some entries around here. This 5-minute here closing. Break the lows. Could have taken that. Could have your stops above this high, right? It was like a 40 pip stop, I think. And then this is your move. This 15, this 5 goes back into the range. This 5 may pull back a bit further. Might come up towards 1907 here. But overall, you want to wait for the 30 to close. And then worst case, wait for the hourly candle to close, right? This hourly candle closes like this. This thing is going to just come down. Unless it closes doji, then we're in trouble. To end the stream. You trading late now? No, it's FOMC.
I think, look, we got to push, and it's probably got to retest those lows. I think we're gonna close below. Well, I mean, we'll see it happen, but if we do close below, we'll look for a top wick and to come back down.
Yeah, Cass is complaining.
I know. The chat always complain. It's so funny because, like, if I was sitting there on the other side and I heard somebody who, you know, has done this for many years tell me exactly what to do over and over again, and 90% of the time it happens, I'd sort of be just like, great, this guy's just, you know what? I may not know what he's talking about, but I'll look at it. And if it makes sense to me, I'll follow along. I'll take a small position because I don't trust the guy, but it seems like it makes sense. And if I made $5 today, man, I'll go over to the store and buy a bag of chips. Like, it's cool. You know, if I made $100, maybe I'll go out to dinner tonight and I'll celebrate that I understood something that someone else was talking about, and I had enough courage to follow my own plan and execute alongside of that. It's just, I want people to succeed in life. And I think a lot of social media is smoke and mirrors. All these people selling courses, renting cars. You know, I actually almost wanted to open a website, an IG page that would track everybody that's ever owned a supercar, because I know when their leases are up. Because what do? They do a video blog about going to the dealership to find a brand new whip. And then suddenly the previous whip has disappeared, right? We don't hear about the other one. Or people that drive high-end supercars in the middle of winter. The only reason you've done that is because you get a better lease rate if you take the car earlier than in the summer, right? It's like things like that. Like I could do this, but then what's the benefit? If that's what people enjoy, that's great for them. I rather teach people to fish and to be successful. And if you love supercars and you love popping bottles every weekend, then this information will get you there. That's the best part. You know, and I'm not upset about people that have course sales or fancy cars. I just think that there should be more disclosure about how they attained such items, right? Like if you're going to own 10 cars and we don't see any of your trades except for once in a while, I don't know, maybe don't show the 10 cars off all the time and say that you're a trader. That's just my opinion.
$30 just closed.
Did it?
Yep.
Oh, nice. Where did we close? Close. Oh wow, yeah, this thing's gonna create a top wick, flip bearish, and then possibly come down to fill 1902 and fill his wick. See what this guy's gonna say.
In addition, we expect to begin reducing the size of our balance sheet at a coming meeting. Economic activity expanded at a robust 5.5% pace last year, reflecting progress on vaccinations and the reopening of the economy, fiscal and monetary policy support, and the healthy financial positions of households and businesses. The rapid spread of the Omicron variant led to some slowing in economic activity early this year, but cases have declined sharply since mid-January, and the slowdown seems to have been mild and brief. Although the invasion of Ukraine and related events represent a downside risk to the outlook for economic activity, FOMC participants continue to foresee solid growth. As shown in our summary of economic projections, the median projection for real GDP growth stands at 2.8% this year, 2.2% next year, and 2% in 2024.
There it goes.
Mm-hmm.
The labor market has continued to strengthen and is extremely tight. Over the first 2 months of the year, employment rose by more than 1 million jobs. In February, the unemployment rate hit a post-pandemic low of 3.8%, a bit below the median of committee participants' estimates of its longer-run normal level. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. As a result, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. FOMC participants expect the labor market to remain strong, with the median projection for the unemployment rate declining to 3.5% by the end of this year and remaining near that level thereafter. Inflation remains well above our longer-run goal of 2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. These supply disruptions have been larger and longer lasting than anticipated, exacerbated by waves of the virus here and abroad, and price pressures have spread to a broader range of goods and services. Additionally, higher energy prices are driving up overall inflation. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine will put additional upward pressure on near-term inflation here at home. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We know that the best thing we can do to support a strong labor market is to promote a long expansion, and that is only possible in an environment of price stability. As we emphasize in our policy statement, with appropriate firming in the stance of monetary policy, we expect inflation to return to 2% while the labor market remains strong. That said, inflation is likely to take longer to return to our price stability goal than previously expected. The median inflation projection of FOMC participants is 4.3% this year, and falls to 2.7% next year and 2.3% in 2024. This trajectory is notably higher than projected in December, and participants continue to see risks as weighted to the upside. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. Our policy has been adapting to the evolving economic environment, and it will continue to do so. As I noted, the committee raised the target range for the federal funds rate by 1/4 percentage point and anticipates that ongoing increases in the target range will be appropriate. The median projection for the appropriate level of the federal funds rate is 1.9% at the end of this year, a full percentage point higher than projected in December. Over the following 2 years, the median projection is 2.8%, somewhat higher than the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Reducing the size of our balance sheet will also play an important role in firming the stance of monetary policy. At our meeting that wrapped up today, the committee made good progress on a plan for reducing our securities holdings, and we expect to announce the beginning of balance sheet reduction at a coming meeting. In making decisions about interest rates and the balance sheet, we will be mindful of the broader context in markets and in the economy, and we will use our tools to support financial and macroeconomic stability. As we noted in our policy statement, the implications of Russia's invasion of Ukraine for the U.S. economy are highly uncertain. In addition to the direct effects from higher global oil and commodity prices, the invasion and related events may restrain economic activity abroad and further disrupt supply chains, which would create spillovers to the U.S. economy through trade and other channels. The volatility in the financial markets, particularly if sustained, could also act to tighten credit conditions and affect the real economy. Making appropriate monetary policy in this environment requires a recognition that the economy often evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. We are attentive to the risks of potential further upward pressure on inflation and inflation expectations. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Let's go to Gina at the New York Times.
Closure, belosure.
Closure, belosure, and we're in, yeah. Closure, belosure.
That was good. Had time to eat a chocolate bar. Delicious.
Cheat day?
Yeah, I didn't go to the gym today.
Again?
What do you mean again?
Oh no,
Like
no, that was
second-
today. That was today. Yeah, I thought we had a call yesterday. Yeah, pretty simple now, guys. I think you gotta wait for this 1 hour closure. So this 1 hour closure is also a third closure, and what you want is to see if we can close below 1902, and then we should fill that wick and drive further. If we close within this range, then most likely this next hourly candle it will spend quite some time ranging, or we'll spend it in between this range 927 to 922.
He's hidden from the world. He's silent.
That's right. Silence in the chats. Yeah, I'm a really funny guy. I think I'm like the Kanye West of trading. Depends on what day you get me, is how I feel about you.
How big's your pool?
Yeah.
They don't want us to have a bigger pool than Kanye.
No. Yeah, my LP just screwed me.
You got slip?
No, I was 120 pips in profit in one position, and it's supposed to take profit, and it just stopped there, and it didn't hit it, and it went all the way back to my stop loss. So I was in profits, but now I got to go complain to them. So it's just they try so hard to screw me every day. It's like that Wolf of Wall Street part of the movie where he's in that Swiss bank. And he's like, because every day I get on the phone with them, I'm like, hey guys, how's everything going? Hope, the world's not crashing around you. And they're like, yeah, hope business is great. I'm like, yeah. And basically all we're doing is we're just telling each other to F off.
Yeah.
Because it's like, well, my clients, yesterday I was on a live stream and a whole bunch of my clients I know got slipped. What happened? Can I get a report? Things of that nature. Oh, that's just normal market movement. You know how fast gold moves. I'm like, really? I said, which LP left? Oh, it was this person. They just closed their book for a couple of minutes. I'm like, oh, that's convenient.
Couple of minutes. That's legal?
Yeah. Oh yeah, they do what they want, right? Because it's like, think about it, like LPs are like bookies, right? They're like they take funds, they market make, they do everything, right?
There's no oversight.
There's no oversight. Like that was the best thing. If you watch on I think it's on Apple Plus, and there's also a part on YouTube from what's the guy, John Daly, right? Or the Daily Show with what's his name? I forget his name anyways. He talks specifically about this, and I was just howling because he was talking about the GameStop stuff, right? Like what happened with GameStop and GME and Robinhood and stuff like that. And he showed exactly how the flow of orders go, right? And then it was like, he talked about how Citadel is doing like this order flow book, right? Where they basically buy orders. And Citadel, it wasn't Citadel that specifically bought all the orders from Robinhood. It was a parent company that's owned by Citadel. So Citadel was like, we don't know what's going on, but it's like the exact company that bought all the stuff from Robinhood. So what ended up happening was the hedge fund that lost the billions of dollars got bailed out by the company that was supplying Robinhood with the order flow. So Citadel bailed out that hedge fund that lost billions. So basically the money just moved around. And he said exactly what I say all the time. He says there's a part of order flow, you can send money to dark pools. And he's like, do you have any more of a, what is a sadistic name? Dark pools? It's like, yeah, I'm going to do some legal work in the dark pool, right? and it's exactly what this is. It's the exact same thing. And that's why I tell people about FX. FX is the hardest market. It's the Wild West. There's no oversight. There's no regulation. And people are like, how do you get away with this? It's because the people that are trying to regulate this stuff They don't even understand what's happening anymore. Like the entire financial market is built on a house of cards. Like it's just all paper. It's magic. It just appears, disappears, it moves around, it gets, you know, it gets reinsured, it gets derivatized, it
What's
does
that
everything.
in the movie? It's all a fugazi.
It is. It's literally what it is. It's like people don't realize, because the financial market has been built to be so sophisticated by the rich that people go to the bank and you go sit down with your little advisor and they're like, hey, we have a mutual fund for you. It's so corrupt, and there's nothing you can do, because as soon as you start to battle, they have more money than you, they have more power than you, they have more ability to change things, they lobby the government, they own the government, they pay the government to do their bidding, right? How do you think politicians get into power? They get into power with donations. Where do you think those donations come from? All these rich people. So you think they're going to be like, oh, can you please make the stock market fair? Oh, please make FX regulated, so you know people don't get slipped all the time, and there's not these giant whipsaws.
They mold it in their favor and how they'd like to see it go.
Yeah,
Same
and
gonna happen with crypto.
yeah, and it's funny because people sit there and they're like, oh, this could never happen. It's like, how do you think the president of Citadel is worth $5 billion and has like 10 homes over $100 million a piece all around the world, with a yacht, a plane, everything else? What, you think he did that by his good graces and, you know, making sure that he donated to the local charity down the street? And then the funny part about that episode was they actually wrote to the SEC talking about this order taking and this order buying, saying how it would corrupt the industry back in like 2004 or 2008 or something like that. And now they're the largest ones doing it. Like, so go figure. Yeah, let me see if I can find it. I'll put it in the chat. It's on Apple Plus, but I watched it yesterday on YouTube. And he literally went on a rant, and it was exactly what it was. Not the Daily Show. Who is the previous guy? He got like basically almost canceled. Someone tell me who he is. No, not Stephen Colbert. It's the guy with the beard. Jon Stewart. Yes, perfect. Thank you.
Jon Stewart.
Yeah.
Got a beard?
Yeah, he's got a beard now.
Oh yeah.
Yeah, this is the episode. You have to watch this and you'll have a laugh. This is exactly how the world works in like summation, in like a little small video.
Tonight we're going to be talking about
Sorry, I mix all those people up. I don't watch TV, so.
Ted, you watch shows all day. You have a lot of show references though.
Yeah, just because, you know, there's certain things that I like. But yeah, I don't really, it's not every day for me.
Ted, how long have you been training for? 42 years. This one our channel's looking nice.
You know, what a joke, eh? Just flies right back up.
Yeah, Will it go up? You need closures there. Wait for his hourly candle. We said it earlier. This candle can close doji, you can close bullish, you can close bearish. Who knows? But let this wild candle close. And 3-15 will be more entries for you guys, all right? But just hold out here. If you didn't catch those entries down there from 1907, 1905 towards 1895, then now is your time to wait for this hourly candle to close. Because that momentum was what shifted price earlier. Right now, the momentum's starting to die off. You kind of just have it's kind of going back to I'll say price action now. So you close above 1915, you're going to drive up towards 1919 here. What I don't want is to counter close doji, but let's see. 3-30 is your time, is your trades.
Basically, the rate increase did nothing for the dollar except now drive it up. So are we saying now 1900 was the bottom for this move and now this is the start of the ascent up? That's actually pretty good. So if you're trading today, take the rest of the afternoon off, come back at 1924, set an alert on your chart for 1924, come back there, wait to see how structure is formed, and then if we do take buys, you're taking buys from 1925 all the way back up to probably 1953, if that's what's going to happen. If basically what's happened now is nobody cares about the rate increase, but they care more about the fact that Russia's invading Ukraine and inflation. Perfect. We're going up to 2000, boys. Ride the train, get everyone on board.
Close your eyes and buy, basically.
This is the great part about trading. This is why, like, people always ask me, like, why don't you work for an institution? Why don't you do this? It's like, you're good at what you do. Like, why would I do that when I can just literally pick and choose how I want to trade, what I want to do? I don't have to listen to anybody. You can do whatever you want. I can sit here for the rest of the afternoon, set my orders, and be like, okay, if it hits 1925, we're going to the moon. Like, it's great. Like, this is the greatest time to be alive. You have so much information at your fingertips. And when I started mentoring back in like 2015, 2016, I said to myself, I wanted to build all these different communities where, like, I think of every community like a planet, right? Like, I'm in a spaceship. Yeah, I'm in a spaceship and I just go from planet to planet. Like, today I'm hanging out at Dawn's planet, right? Like, everyone's here. I don't know half these people. They're pretty cool. Everyone's fun. Like, you know, we have a good time. I follow a whole bunch of these people online. So I guess at one point I thought that they had information. Like, I follow Wix. I didn't realize I followed him. I'm like, because I was like, he's really good at what he does. And I was like, oh yeah, I guess because I follow him. It was just really funny because I always listen to you talk and I was just like, man, this guy is on point. So I always like to follow people who are on point, so that I can sort of get like just a bit of information. And truthfully, you guys work a lot harder than I do now, right? Because I sort of set in my ways. I'm an old horse. So I always look to the younger generation to sort of give me insight into what's going on and like how things work, right? So that's why I like sort of hanging out and just sort of keeping up with things. And then, you know, I go to another planet, like I go to Raj's planet, like, you know, Wix Don't Lie, go over there for a bit, and I just sort of float around. It's great. Like, you know, people ask me, like, do your own live stream. It's like, I don't need to. I just go to planet to planet. Yeah.
Hilarious.
Yeah. But that's how I always wanted the environment for FX to be, because when I worked in corporate, I knew how corrupt corporate was. I worked in finance. I knew how cutthroat it was. I knew that people were just greedy, that they're gluttonous, that they're just trying to take advantage of you. And I always wanted the simple people to come together, to work together, to be like, hey, if we can have like 10, 11, 12 brains working on the chart, there's going to be a positive experience here. And I've always said that is like, you know, you don't want to trash people, you want to elevate them so that they get better. And absolutely, that's what I always wanted to do. It's like sort of like Raja's way bigger than I am now. He's eclipsed me in like so many different ways, but it's great because I can still give him insight. I can still help him. He still helps me. And it's that leapfrog effect, right? Where it's like, I find an idea, he refines it. I look at his
pushing-
idea.
Keep pushing each other.
Yeah, I refine his idea even more. And then he refines, and it keeps going and it gets better and better. Where it's not like, oh, you didn't know what you're talking about. It's like, no, I found something new. And I think that's what people should actually do. And that's why I like coming to these streams and doing stuff like this, because then you can really take advantage of stuff like this. It's really great.
I think that's the vibe we got going here.
Yeah.
Help build on each other's stuff.
There goes gold above 1914. So now the next hour close, you get a little pullback. You can ride it all the way back up to 1924, and then there you go, and you're like, happy day.
For those wondering like why I tested 924 earlier, it was because if you guys look at the daily, you had a high this morning which was created around here. Your price came up, created a top wick, tapped that resistance, came down, tapped the support here. So now if 1924 breaks again, right, the day high, there's a high chance of momentum that this count's gonna flip bullish and end up doing something like this, right? Because as it flips, obviously it's gonna be bullish, and momentum should push up. We're closing this day candle bullish as well. So if we close today above this resistance on the daily in about 2.5 hours here at 5 p.m., then tomorrow's daily candle will be pretty easy. It'll just be like something like this. You're expecting price to just drive out towards 1950, and now you have all that clean traffic to the left because tomorrow you have this direction on this daily candle. So if you guys are unsure about like today or the next couple hours, you guys don't know what to do, just wait for this daily candle to close. And then tonight during Asia and London, you can look for buys going up towards next resistance here at 1950, and then so forth, right? And then the weekly candle, I think the weekly candle would then be, end up flipping. The monthly create a steeper bottom wick, starting to reflip again. So that's what we discussed this morning as well. Everything just makes sense now. Everything just makes perfect sense. So I gotta wait at this point.
Yeah, if we close anywhere here, it's a range too.
Yep.
Right?
Yep.
Or,
We clean buys. Better
yeah.
range.
Completely clean to go up. You just gotta wait. We gotta get this closure. We only have 5 minutes, Jeff.
Yeah, and you guys are asking about stops. It'll probably be the current count lows or first 15, first 5, whatever. If I jump in, let you guys know. Wait 4 minutes here though. All right, last thing I want to do is take a position now, and then next thing you know, it's kind of just pulls back into the range, and now you're stuck in this range here. You shit in your pants. Not gonna lie, Don kind of smart.
Don't cry.
To this day.
Yeah, you don't want to be shitting your pants, guys. It's looking good though. The range going up in this area is gonna be 90 pips here. 90 pip range going up. So if you didn't catch the, what was that position earlier? 170 pip move down, you're gonna catch this 9 pip range going up. Just be patient.
So easy.
Yeah.
You use current candle
Yeah.
stops.
Yeah, I got thinking this next candle, like looking left here, like all these wicks here, once you close above back into the range here, all these wicks came down to a medium of like these levels here. So this next candle opens up, it should pop up and create a wick somewhere there, and then that'll be our stop
35.
loss. Yeah.
Drop,
and
35
drop
right work.
into the 5-minute candles, and I'll show you something.
I love seeing stuff.
So see this? This is going to be your range right over here. So when the new hour forms, basically what's going to happen is these 5-minute candles are going to dip into this area here, and then you're going to drive up. So what you'll do is you'll place when this 5-minute candle, because you can see here there was all these little orders rejecting and the 5-minute. So we need the 5-minute candle to create support. It's going to bounce back into this area. And then once it bounces back in, then you can take buys above that current 5-minute candle. First take profit here, second take profit here, and then basically that's going to be your top take profit. But that's what you'd be doing if you want like a really, really good entry. Now keep in mind, you need to wait for this 5-minute candle to flip, and then what you're doing is you're watching your 5-minute, and then the 15-minute now is going to look like this, right? The 15-minute is going to have this bottom area, and that bottom area is from your 5-minute. So keep that in mind. But you can see like 1914.50 is like a nice little support area, and it'll bounce off of that. So, you know, if people don't want to be cowboys, they can take buys above this area over here. And then what you're doing is your stop is then going to be probably as soon as this candle low is created at that point. But the idea is you're going back up to this area here. So if you take a buy over here, you're expecting to go to the top of this level here. So your stop loss will probably be maybe 10, even 20 pips, but your take profit is going to be like 60 pips. And I'm saying 20 pips being generous because I don't think it'll drop that far. But the idea is you're not going to take a trade until you get confirmation that this candle's moving up. That's what you're looking at that point. So you drop into smaller time frames, you get a little bit better information.
My buy stops like 300 pips up. That's gonna drag them one.
Yeah, like you can see right now, the 5-minute is sort of sitting right now. So the next 5-minute candle maybe dip a bit. And then what you can do is you can have buy stops above like 1916 or so, and just let it drive up into that. But then your stops are going to be probably below this candle. You may get stopped out once or twice as it starts to form. Ideally, if you want, you can let it grow a bit. And then what you can do is you can probably take buys at like 1919 to 1924 as well.
I'd really want to see maybe a 20 to 30 pip wick. Sorry, go ahead.
I got yeah, I was gonna say I got buy stops here, so that was the wick I wanted. Where it's happening to minimum this area here, so I got buy stops now on the break of the highs. I think I was contemplating that either break of the highs or flip. It's like a 8-7 pip difference. This is more cowboy than this. This would be the safer entry because then from here you just right up towards here minimum, and that's your break even point closing half, and let the rest run towards 24 here. So yeah, I got buy stops right here at the 1918. And
break of the next candle.
The break of the previous kind of break of the previous. Actually, no. Now we're coming down further. I might actually move it down towards here. Yeah, because now we can just. This is a steeper wick now, right? Because like the thing is like with me entering on a break of the highs was because at first we didn't have a decent bottom wick, and we couldn't use the previous candle stops for 150 pips, right? But now that we have a decent bottom coming down those levels, you can use a current candle stops for 30 pips and TPs up here for 70. So buy stops are right here, and once price fills that wick, that will be when we'll be move stops break even. If price doesn't activate, then cool, we delete them. Nothing happens.
Yeah.
Simple trade.
100%.
That's it. But we should fill this wick minimum, and at that wick fill, you get like I think a good 15 pips at that point. So that's take partials there. Let the rest run towards TP at 1924. $19.11 looks like it's gonna be your stop loss here. If it flips here, so be prepared. It's gonna be a 40 pip stop, I think. 50 actually. Let's make a quick push, guys. Just beware. $19.16 and 0.84. 1918.58.
Go FOREX.
Yeah, a little low, a little below. I'm using fives like all month. I'm just gonna continue to pop a 5 here. Yeah, it's 5-minute perfect. Look where we tapped into, right? So those levels we mentioned earlier, right? The 1 hour time frame, tapping into these levels down here. So tap here support. This thing flips. It's gonna fly up towards 1918 minimum, and that should be a quick push. So just be aware. I'm looking to secure half around there. It'll be great. This 5 can just close above the support too. Above 1914 here. Overall, the trade's based off the 1 hour, right? So.
You counting for spread?
Spreads are like 2 pips right now, no?
Yeah.
1.9? Yeah. Here it goes. Oh, this 5 goes below. Or right at support. So this 5 can flip, but if it activates and we're in. And if it comes down to re-break the lows, most likely it's going to continue further down towards like 1910 here. So at that point, I'll be deleting sell stops or buy stops if that were to happen. Is this your second trade of the week? Yeah, right? Second trade on stream. All right, here we go. Once it breaks, we'll be in.
I don't like this 5, but oh well.
A 1 hour here, right?
Yep.
Mm-hmm. Thing is, this 5 it doesn't activate here. It's gonna flip bearish. It's gonna drive back down towards 1910 here. We don't break the highs. So close. What stop loss? Current count low. 45 pips, 48 pips, 50 pips roughly. TP is up here. Once I'm in, I'll show you as RR2 or whatever. Like we usually do it, right? All the trades this month, Chad. We did the same thing every time, so nothing's different about this trade. Showed you guys from the start of FOMC what I was waiting for. What he could have done, right? For those that didn't get positions earlier, here's your position.
Bottom wick on this 5. Bottom wick on the next 5. Drive up. I want the 5 here to close above 1914.9.
So reminds me of this morning's trade. Remember that 10 a.m. trade? I think I spent 20 minutes creating a top wick. And flip and it
Yeah.
just. Yeah, it's 5 here. Here's the thing, guys. This 5 doesn't flip, right? So look, this 5 didn't break the highs, and now it's creating a bottom wick here. Or I mean, like it didn't break the highs, right? So now that it's flipping bearish, this 5 could possibly drive down towards here. And if it breaks this low right here, I'm gonna delete the buy stops, and we're gonna have new orders afterwards, depending on how we close on the 15 and stuff. But yeah, be patient here.
Yeah, if it flips now,
This is good.
this is nice. This is good. We create a bottom wick here. And if it flips, it's gonna hold this support. And it's gonna be, the 5 is gonna be closing above 1915, and next 5 you can imagine tapping this 1914 area and driving up. We just need to hold above 1915.
Yeah, this 5 here in 30 seconds. If it closes above, like you said, right? Above the support, the
Yep.
next 5 should just pop up and activate.
Let's see.
Oh, there we go. Yeah, if it closes like this, that's perfect. The next 5 would create bottom wick, come down, and 1915 just pop up, and that'll be the buy stop, and then this thing's gonna go whoop. Look on the left, look at the range you gotta fill after, right? You break this high, you're going straight towards 2018.
Activated.
Oh, there you go. All right, so I got in a position
And
here.
slip.
Buy stops got activated here, so my stop loss is gonna be the current count low for 48 pips. TP is roughly up here for 70 pips, 80 pips here. So we're using current count stops here, not the previous count stops. Putting our trust into this 1 hour low. And yeah, slipped really? Not really.
Oh.
A pip or two.
No, I'm lying.
Again? Again? Nah, not like last time. It was like 30 pips.
No, I didn't get slipped. I'm lying.
Yeah. Wow, you got activated last second that 5 minute candle.
I looked at the wrong thing. Sorry. Oh yeah,
So-
a pip and a half, 2 pips. That's fine.
Keep in mind too, while you're trading in this sort of new range, the 15-minute candle is creating that low. The next 15-minute candle can visit that low again and then drive up, right? So keep that in mind as you're understanding the market flow, that we could get one more pop up or one more drive down before this continues to drive. But like Don says, you have that low created, and like I said, that's probably where it would go. It would dip first and then grab all that liquidity and then continue to drive up. So you can see now things are starting to marinate, right? So patience plays, and don't have to worry too much, and just let the market do what it does.
Absolutely. Let it rock. Put your trust in the higher time frames.
All right, there you go. Once he fills wick, I think that's like your 10, 12, 15 pip mark, I think, at that point. I think, yeah, I'm like 10 pips in profit here.
Are you?
Yeah, I'm 10.
Not-
I'm like
I didn't-
9,
not
no,
able.
okay, 9.5 here, but roughly. I'm gonna move stops break even once you tap that wick there. Once you break the highs, basically. Here we go. Here's a push. And you break the high. Once you break the highs, it should just go straight up towards 22 or 1920 here. All right, look left, chat. All I do is look on left, right? Like, if we tap levels, it's like you're cracking a rock. You keep cracking at that rock. Price keeps tapping that level, and it's going to break through eventually. So, go around and tap that high over there. It stopped, came down, retraced, created a bottom wick. It breaks the high again. It's going to pop up. Just look left. That's it. If you want to stop breaking, you can. Do whatever you got to do.
I didn't get 10 yet. I mean, I got 10 on the dot.
Yeah, I got 10 on the dot,
Too
too.
quick. Too quick.
It should,
I mean,
it should
look
pop.
close.
Like, it should just break the
Yeah.
highs.
Wait, watch your minute candles.
Yeah,
You'll
I'm
see
watching.
the next
That's
minute
so
candle
funny.
will fly.
Yeah.
You can see already the minute candles have created support at 1914. So now the next minute candles will start to pop up. So if you're like sort of nervous a bit of like what's going on, you could already see what's happened. We went through that little valley on the minute, and then now we're starting to move, right? And this push will be the last few minutes for it to push up a little bit for the 15-minute candle to finish. So just be very quick.
Yeah, chat. I was able to secure half there.
Really?
At around like 9-10ish. Now I got stops to break even here on this candle. If it drives up, it drives. If it doesn't, it doesn't. But I got stops at break even here. That was my trade, right? That was a plan. I told you I was gonna be quick once you were to break the high there, and at that point, I was risk free for me. All right. I think I hit break even. That's my trade, yeah. So. If you guys are still in, then you're putting your faith into this kind of re-breaking the highs here. It must re-break the highs in order to be valid. If it doesn't, then I say wait for its 15 closer. But yeah, that was it. That was it. So you guys are push. All right, I label things here just so like in case you guys got like magic keys or whatever, you guys can just do it pre-hand because it's gonna be scalping is gonna be really quick, especially with gold too.
I didn't get to close. That's tough.
Should be fine. I mean, this 15 should close above in about a minute here, respecting that support. This next 15 minute will pop up if it does, and if it breaks the high again, that's a 15-minute starter play for you, right? I mean, that's what you always want. So you can just re-enter there.
As long as you respect 1914, you should be okay.
Yeah.
Yeah. Otherwise, it's gonna head down. Absolutely.
Yeah.
W. Trade. So if you guys missed the first trade for 100 pips, you got your 10. You know, can't complain. You made money, right?
I think people made enough money this afternoon.
Even this morning, some people were just trading at like 12.
15 celery. Come on.
Yeah, so it should fly up too because that 15-minute candle is basically a liquidity grab to then drive for the rest of the hour. It'll happen sometimes, but if you're scared and you don't feel comfortable, just close your position in the next minute or so. Right? Because what you can say to yourself is we're not going to break those wicks on the 15-minute, so I'll take my exit right now before it pops up through that and then pulls back down again. So you just manage the trade accordingly. Don't worry too much.
What you could do as well is like if you guys aren't comfortable and you're like roughly around the break-even point here, just close here and have buy stops above the break of the highs at the 15, because 15 breaks the high, you're gonna see 20. You can do that as well.
Yeah, I still believe in the hour candle.
Yeah, the candle is key here.
Look at this way. The way gold normally works is the first half of the hour it goes one direction, and then the second half of the hour it goes the other direction. And what happens is people get screwed trading gold because the first half of the hour they're in drawdown and they're like, oh, this is sucky, it's not moving. And then the second half of the hour, if they had held their entries from the first half of the hour, they'd be in huge profits. But now they're trying to re-enter, and that's the end of the hour move, and then it starts to pull back down again. And then people are like, this is ridiculous, I'm getting stopped out constantly and I don't know what's going on. And it's like, if you understand sort of the ebbs and flow of gold, once we've created that bottom wick, it's very unlikely that it'll just return there unless there's something that happens. But it'll get choppy, like it'll bounce around, but it'll never go back down to that low again. It'll just keep incrementally growing, and then you'll see like the next 30-minute candle will just fly suddenly and you'll be like, what the hell happened? Like I was in like 5 or 6 pip drawdown and now I'm in like a 30 pip profit.
Here you go. You're
Man,
breaking the highs, and there's your push.
you know, fucking thing.
Yeah.
Nice chat. Good stuff. Good stuff. Good stuff.
There you go. So there's your first take profit point, 1919. You entered in. You should be exiting if you want.
The thing is, it came up already, right? Then it came back down.
Yeah.
Flip bearish, and now it came up, flip bullish, and rebroke the highs. Why would it come back down again?
That's right.
One thing I'm worrying here is about this 30-minute resistance here. But I mean, we close in 12 minutes here, and or you can just re-break the highs and fly here. Overall, the 1 hour looks very clean.
Yep.
At this point,
I,
though,
uh,
you want to just be able to secure profits here because this is a minor resistance. So level where we could reject that. At this point, you really want to secure profits, secure half or
Yeah.
something.
I
Trail
got
stops.
Two-thirds of my position I secured, and I got a TP at 1922. I'm gonna close, trusting it to drive up there.
There you go. So there's another trade called out, giving you exactly where you need it to be, where you need to put your stop. Okay. So like, if you want, go back and replay these streams and you can see exactly how all these trades took place.
Boom. I just closed.
This is what happens when you're calm. You think of the variables, you plan stuff, and there's 1924. Congratulations, everybody. You win again.
It was it.
What did I say yesterday? 3 p.m. would pay you. 3 p.m. paid you. Look at that. No problems.
There it is.
Man.
Yeah, in terms of managing risk, like everyone manages risk differently. Some people like to manage risks stops to break even. Some people like to trail stops. You know, it's up to you. It's all optional. This is just obviously like the way I traded it.
What is
so,
that? What are we? We're still undefeated for March.
Yeah, I changed the record already. Love your day, chat. Love your day. So
Yeah, you changed
now
the record, but it's not official till I win it.
Oh yeah, you're right. Hey.
Okay.
Hey, look at that daily now. Wow.
Mm-hmm.
Flipping bullish.
The great thing now is when you look at the daily, you're like, that's amazing because the next daily candle will pull down and it'll continue to drive up, and that's where you're going to get your next move. It's amazing because now you can plan out even larger time frame trades, and you can say to yourself, hey, this is where I want to be, and these are the levels that I want to be at. So, but you see 1924, it hit right there and it pulled back. So you didn't have to really concern yourself. You were already in profits. 1924 was your target. 1923, 1922, 30 pip trade, 40 pip trade took you less than a half hour to complete. There was no sweat. You had planned out your stops. You planned out where your take profits were going to be. No issues.
So I mean, now that's it, chat. Like you had that position earlier. It's just wait for a daily count close. If you close bullish above 1927, then tomorrow is gonna be a very good day. I suggest you guys come by. But yeah, depending on how we close tonight on the daily, it should be very interesting tomorrow. But that's it. Like that you're tapping these ranges now, and it's just, I guess, choppy from here. So
yeah. But I just want people to understand now that this is how trading should be. Like the mythology behind exactly what was planned out and what was said, you should be applying the same logic to your trades. You should be looking at the environment, looking at what's happening, saying to yourself, if this happens, I will do this. If this happens, I will do this. But right now I sit and wait. There was no, oh, we got to buy now. We got to sell now. We got to do this. It's like, no, just sit back.
People are too locked in on the smaller time frames, and you got to focus on what the higher time frames are telling you. People are too tuned in to every tick of the candle. And so
the 5-minute candle rejected. Oh, the 30-minute candle went down. It's like, just relax. Let it do its thing. It's okay. The great thing about being a retail trader, and this is something what you should think of in terms of retail trades, and write this down for yourself, is you have no accountability to anybody but yourself. You don't have to force trades because you need to make a profit for the quarter, for the company. You don't have a daily target that you need to hit, otherwise you get fired. This is your opportunity for full autonomy, full freedom. Take advantage of it. If you couldn't find a trade here, that's okay. Go back, review, take a look what happened, say, hey, I'm going to try and apply that knowledge for the next one. If you took 10 trades today, pat yourself on the back. You waited. This is what you wanted. You wanted a 3 p.m. candle. Ted said it's going to go up to 1924. I'm going to full margin my account. I just tripled it. Great. Don't do it again, but you got lucky this time. Take advantage of that. No, it doesn't hurt sometimes to be lucky, right? Like, what is the old saying? I'd rather be lucky than good, right? And then there's the question, we were against the daily and 4-hour. How's that? Well, how's that? It's called fundamentals. And we evaluated the fundamentals. We said that the interest rate came in, people took that low. Powell came and spoke and said that interest rates right now don't really matter because the whole rest of the world sucks. And the market has basically decided, yeah, you're right. So let's all pump money back into gold.
Al was kind of flimsy on
Yeah.
on his speech, and the technicals based on the way we trade. This was also a range 2 breakout for us, so we had range 1, range 2, and then when we closed above 1915 was 1902, 1907 range 1, 1907, 1915 was range 2, and range once we closed above there, based on the way we trade. Yeah, that was
It just matched up perfectly.
it matched up perfectly with the fundamentals. Yeah. Once we closed above there, we were going straight up, and I didn't close right away, but Ted said you can just see the hour driving up from there, and I say it all the time: put your trust in the higher time frames. Going back to what you said before, people just have an issue accepting the raw responsibility that losing and trading puts on them.
Yeah, it's true.
It's always somebody else, but when they win, it's always them.
It's funny because I guarantee if people sat with me every single day, they would be a great trader because they would see my day is 20 minutes long. I plan out stuff. Exactly what I did, what I said is exactly how I plan my trades. I just said it out loud. Normally it's just in my head, but I said it out loud. Exactly what I did. There's no secret sauce. There's no special secret that I'm withholding. I do it every day. The only difference is each day is different. The variables are different. The idea is the same. The application of the information is the same. It's all about how you're able to understand what is currently happening. And like I said, if people sat with me every day, and people have done this too. People have come over and they're like, hey, I want to trade with you. And then we take a trade and I'm like, this is what's going to happen. We're going to go here, we're going to do this, and then we're done. And then we're done. And then they look at me and they're like, so what do we do now? I'm like, that's it. He's like, but there's more opportunity. It's only 8:05. I'm like, yeah, great. Now we can go off and do stuff. But what do we do? Like, what about New York Open? What about the New York Stock Exchange Open? What about like 9:30? What about all this? Look at the market can continue to move up. I'm like, that doesn't concern me. What concerns me,
more risk.
Yeah, what concerns me is I took a position. I was successful in that position. I planned it out. That was the position I wanted. Now I'm done. Yeah, but we could have grabbed more. I know, but we could have also lost more. Oh, I guess you're right. And then you do it again the next day. But that's it? This was only 10 minutes. What are we supposed to do now? I'm like, there you go. That's all it's supposed to be. People overcomplicate and make it more difficult for themselves. All right, what I don't understand is how could you have a 40 pip stop and only secure half at 10 pips? Well, that's risking 100 to only make 12.5. Well, it's not, you're not offending anybody. What we're doing is you're putting a stop in place to protect your account. You're not hoping to hit that stop. You're making that stop wide enough so that you can take advantage of the position. I think people have a very negative way of looking at stop losses. The stop loss is to protect your account. The stop loss is not meant to be hit. And a lot of times when you're taking a position in momentum, you're not going to return down to that previous low. So we put you put the stop loss at a previous low or above a previous high because you're anticipating we're not going back there. But if there's any sort of fluky market environment, like if there was a flash crash with gold, you wouldn't lose your entire account, right? Like that's the idea behind using a stop loss, managing positions. But for the most part, if you're trading with momentum and you're allowing the price of whatever you're trading to come towards your order, you will be in the right more times than you'll be in the wrong, because you're not executing based on and like anxiousness or based on the fact that you need a market order. You're anticipating the price coming to your order, and that means you're in momentum.
And the stop loss is dynamic, right? Like your risk changes. So at 10 pips, you're not your
Yeah,
R to R is gone. You're playing with house money because now you're at break even, right? You've basically, you won. Now you've secured some profits. You got house money. So now your RR has changed to infinity because
yeah.
you have no risk on the table. And initially, I think the RR is there as a parameter, as one of the stipulations we use to enter a trade. So we're not going to enter unless it's less, if it's less than 1-1, which kind of helps us stay
Yeah.
profitable, find more profitable trades. But it's just a parameter we use to determine if this trade is worth entering or not. And
Yeah. It's like the moment we move our stops to break even, like instead of it being like RR, like a 1-to-1, 1-to-2, it now becomes like a 0-to-1, right? There's just no risk on the line, and you're just protecting your capital at that point, right? Like you can say whatever, but at the same time, like if we didn't manage risk the way we did, or I didn't manage risk the way we did, these break evens here would have been losses probably, right? They're there for a reason. They're because of structure, and sometimes we survive runners, sometimes we don't survive runners, but again, tomorrow come to the charts, look for the same subs, follow the same plan, do the same thing, can manage the same way. So I mean, it comes down to how you what your plan is and how you want to deal with things, right? That's it.
Yeah, because the thing is too, if you looked at it, if you took positions above, I guess it was above 1914.60, right? So if you took positions above 1914.60, the deepest it went was 26 pips, and the highest it went was 100 pips. So 26 pip was the lowest point on this trade, and then as you went up, you were already like at a 2-to-1, 3-to-1 at that point. So I think you just have to manage your trades, but don't be so, and this is what I always tell people, is don't try to trade within a box. Like don't say, oh, because I have a 30 pip stop loss, I need a 120 pip gain for like a 4-to-1, or because I have a 10 pip stop loss, I need a 30 pip gain or a 20 pip gain. Sometimes your 10 pip stop loss, you never go down into 10 pip drawdown. Maybe you're in like a 5 pip and you get to like 10 pips. So you did do it a 2-to-1, or you get 15 pips. You did do a 3-to-1. Just be very fluid with that, because if you constantly look at those numbers and like, I need this so this can happen, you're going to miss out on a lot of opportunity. But in the second half of that, you're going to hurt yourself more, because what you're going to do is you're going to say, well, I have a 3-to-1 risk to reward, so I can go into a 30 pip drawdown. And there's going to be instances where you go into a 30 pip drawdown and it's blatantly obvious that the market is moving against you. So you've basically just wasted 30 pips because you wanted to hold a bigger drawdown because you were looking for a 120 pip trade, just as an example, right? So the idea, once again, is if you're monitoring your trade and you're managing your trade, you can see pretty much when the market is going to start to shift against you, not, okay, I should hold. As an example with gold, let's put it this way. If you're ever in a 50 or 60 pip drawdown with gold, you have probably a 40% chance that it will come back in your favor. Most times when you're in that deep of a drawdown, gold is in the wrong position for you, because normally with gold trades, especially the way that I trade, you'll be in a 20 or 30 pip drawdown max for like maybe 2 minutes or 5 minutes. It'll be a single candle. Like this 20 pip drawdown, if you were in it, you're like sweating, right? Because the 5-minute candle dipped, but it's like, whatever. That's like a 5-minute candle. Like it's 5 minutes of your life. And then it goes up like 40 or 50 pips after that, right? But that's kind of the emotion that you have to do when you're trading a high volatility pair. It's just, once again, a lot of internet talk is all about risk to reward, stop losses, this and that. And it's like, sometimes you have to let your trade breathe, right? Like you're not, let's put it this way. If you put your stop loss at 10 and then, or you close out at 12, what's the difference?
Based on what? On what?
Yeah. Like what's the difference if you close your stop loss out at 10, or you close your stop loss at 12? What did it hurt? If you take profit at 10 or you take profit at 8, what did it hurt, right? Like these are semantics where if you're just focused on making positive trades or making progress in a positive way, you're not going to look at any of that stuff. You're not going to be like, oh, I was break even like 100 times. You're not going to look at that stat. You're going to be like, my account is still at $100, right? And that's the mentality you sort of have to be in as well. Is I'm still making forward progress. And I think when you start shifting your mind to say, okay, you know what? These are things that I can control. These are things I can't control. If gold is bullish right now for the hour, chances are we're going to go up. I've seen this happen like 1,000 times. Do I really need a stop loss? Probably, just to protect my account. But am I supposed to measure it out to be exactly where it's supposed to be? No, because I'm already restricting myself. What if I only get 6 pips of profit and I had my stop loss 20 pips below? Now what's happened? Oh, I have a negative risk to reward. I'm a bad trader. Guess what? Instagram hates me now. Like, look what you've done to yourself. You don't look at the fact that you had a positive trade, that you actually won. You look at the fact that you didn't do it correctly because someone somewhere in some magical world told you that that's not how you're supposed to do it. It worked. It's sometimes you're on the highway, you have to do 100 and you have to do 60 or 70 miles an hour on the highway to pass a tractor trailer. You're speeding, you're going to get a ticket, but maybe you don't want to die when that tractor trailer swerves and jackknifes you. Like, there's just instances where, you sort of take liberties and you say, hey, yeah, the stop loss didn't really work because my risk to reward was a bit off, but I was happy with that profit. I took 10 pips. I went to break even. That's okay. I'm fine with that. Like, don't be so hard on yourself. Don't try and build such a box around you that you're gonna be emotionally damaged because of the fact that you're not doing exactly what someone told you to do.
I think people have to be aware also as you're entering the trade and candles are closing, right? You're constantly forming new levels, new risk
Highs, lows.
is being calculated, right? New highs, new lows are being formed. So as you're in a trade, risk has to be adjusted. Yeah, you can't just stay. If the market is dynamic and always moving, your risk always has to be adjusted as well, because once the probabilities start shifting against you or are not in your favor, you have to be able to realize those times and see where you can back off the charts. But yeah, the reason we always adjust risk, and risk is ever evolving, ever moving, is because the market is constantly moving and creating new levels, and you have to leave room in your trading to be fluid and to think outside of the possibility of what you have in mind is going to happen, but what could actually happen. What can happen here? Not how is my win going to look, but what can happen here? Like, how are the candles closing? What are our options with every candle close? What's our risk that's valid for this position? Just be sensible in your approach. A lot of it is just being sensible. Not being emotional, but being level-headed and sensible. It has to make sense on all levels. None of this can be guesswork. It shouldn't be arbitrary. Nothing should be like, well, I guess, or well, seems good. Looks like something I've seen before, but like, why? There's closures, there's volume, there's break lows, there's your reasons and valid reasons. Just feel like it. Have valid stops. I mean, have reasonable profits. Not a get rich quick scheme. Put in the work. Experience. Sorry, go ahead, Don.
No, I got nothing to say. I'm just letting you guys talk while I just chill here.
What are you doing? You putting IG story?
No, I'm not. I'm just chilling. It's a good day. It's like we got our temp. We got my pips, and that's it.
It's funny. I don't think we took a trade yesterday.
No.
Right? We didn't take a trade yesterday. Some people caught dubs. We missed out, and then we took a break even in Asian, and all morning we sat. Imagine you're like, fuck, no trade all day yesterday, then sat in the evening, got a decent trade in Asian, it didn't move, close break even. Now, sat all morning, no trade, and I didn't need to be motivated to sit again from 2 to 4 or from 1:30 to 4. It's just something that I was gonna do. This habit now. No motivation, just we knew we were gonna show up, and regardless, trade or not, we were gonna look at it, we're gonna analyze, we were gonna do what we do all the time. We're gonna see how the market moves in these conditions. We're gonna learn from it. Trade or no trade.
That's it, guys.
Except for the stream.
That's it. I mean, what more do you guys want now? Wait for a day count close. You have an hour and a half left, and tomorrow will be a more nice day. Tomorrow's gonna be a very interesting day, to be honest. I want us to close above 1927 here. If we can close, because look at it from this perspective. You kind of had this range from here, right? This is your range here. If you close above this range, tomorrow's candle will be very easy. Basically, 1950 will get tapped if you close above. This is all clean, and then so forth. But yeah, at this point, you want to wait. Oh, yo, by the way, thanks for the $100 donation, Andre. I didn't see that. And shout out. Thanks for 100. Appreciate it. But yeah, at this point, you just want to wait for a day candle. There's nothing much for me here. Not nothing much at all.
If you guys didn't get it today, show up tomorrow. You'll get it tomorrow. Keep showing up.
Tomorrow's only Thursday too. Yeah, you have Thursday, Friday. But yeah.
And look at this push. If this is the bottom wick to push up, this should be fun. There's a lot of room to go up. To
I'll be in the Discord during Asian. I'll be around in the Discord chatting if I see anything, but for the most part,
that means there's potential.
There's no stream, man. There's no. I'm out. I'm gonna get some food or something. I'm hungry. But yeah, thanks Steph for coming by again, man. Appreciate it.
See you tomorrow.
As always.
Big dubs.
All right, chat. Have a great day. Catch you guys tomorrow, 6:30 a.m. Eastern. Peace out. Peace out. Peace out. Oh, by the way, our streak continues. I mean, our streak of 12 wins, 1 break even for the month, and 0 losses for the month of March. The yearly record is 26, 6, and 4. So on stream. So amazing shit. All right. But yeah, guys, thank you for. I think we hit 1.2 there. Say stream too. FOMC stream. So
that's 2 in a day.
Yeah. Oh, by the way, GJ popping up here. So that was a nice candle. Wow, 139 pips. Yeah. All right, chat. I'm gonna get some shit done. All right. Have a great day. Peace out. Much love. Thank you for the 5th time. Thanks, everyone.
Later,
though. Later. Wordo. we know the answer. Yeah.
Yeah, Marcos ruined it for us today. You think he's trading? No, right?
Yeah, he did. He took me. He told me he took positions.
He took me.
He's like, yo, great signal. You called them. Like, yeah, I know I called it.
Amazing. Great stuff.
Peace out, chat.